What's up, everybody? My name is Kyle and this is my personal finance channel. So welcome back. If you're new here, welcome. The reason I have this cheese stick in my hand is because my dog here, Mr. Aston, he listens very well. He likes to indulge in cheese sticks, so I share it with him. But either way, today we will be talking about two stocks in particular. MARA, Marathon Patent Group. It's a Bitcoin mining company. I actually just did a video on the Bitcoin miners and how I sort of look at the valuations there and what I look at when I'm looking at those stocks. So if you haven't seen that, definitely go check out that video as well. But today I'm going to be talking about MARA more specifically and BITW, which is the Bitwise crypto 10 index fund, whatever it's called. So MARA up 22% today. I'm going to speculate as to why, but this is more actually going to cover because I took a position today when the stock was up 22%. So yeah, hear me out. And then Bitwise, I'm going to talk about why that stock, or I guess index fund, whatever you want to call it, was down today, even though Bitcoin did trade higher all throughout the trading day. I believe it started around 31,000 early on when the trading day was starting, and it went all the way up to 34,000 by market close. If you look at GBTC, which is Grayscale Bitcoin Trust, that was up, I think, over 10% today. Meanwhile, Bitwise was down. And well, here's why, and here's why I bought MARA. Good boy. Alright guys, so first and foremost, let's actually back it up a little bit. I did a video a while back saying why Bitwise was overvalued and why you really shouldn't be buying it. And the reason is also why it's down today. So the way these index funds work is there is a NAV, and I've talked about this in this video. I talked about it in another video recently too. ETHE, it's Grayscale's Ethereum Trust. And the problem with a lot of these funds is that they're trading at a huge premium to the NAV, the net asset value. And I've described this more in those other videos. I'm not going to talk too in depth in this video about net asset value, but basically if you go to Bitwise's website or Grayscale's website, you can see at the close of any day, they typically have the last trading day, but they'll tell you what the NAV is on that day, and then they also show the market price. And if you see on Bitwise, the market price was like double or triple whatever the NAV was, which means that it's trading at a 100 to 200 or 300% premium to the NAV. That's crazy. So for reference, Grayscale's Bitcoin Trust, that was trading at, and even the Ethereum Trust as of the close yesterday, was trading at a roughly, I think, like 15 to 20% premium, which means that for every Bitcoin that they held, you're basically paying a 20% premium than if you just bought Bitcoin itself in the open market on a relative value. So the reason Bitwise traded down today is because it's still trading at such an insane premium. So even though Bitcoin was up, because this asset was trading at double what its net asset value is, it can trade down, Bitcoin can trade up. That means the NAV will come up, but the market price, that's what you see on the open market, the market price traded down. That's called price convergence. That's when the NAV, the net asset value, and the price in the open market are basically coming closer to price parity. So price parity just means that the NAV would equal the market price. That means there's no premium, there's no discount, it's trading perfectly, it's priced exactly as it should be. The problem is that some of these funds, they just got really hyped up. Robinhood day traders, whatever you want to call it, just buying into these things without actually understanding them, made them trade at huge premiums, and then people lost a ton of money. So just be very careful when you're getting into some of these funds. The reason they go up sometimes 20, 30, 40, 100% in a day is simply because of supply and demand. There's only so many shares outstanding. If more buyers than sellers want to buy the stock, it's just going to inflate the stock price, and well, you're going to end up paying a huge premium and potentially lose a ton of money even when the underlying asset is up on the day. So I hope that was helpful and hope that explains a little bit as to why Bitwise can actually trade down when the underlying assets go up the same day, and that's because there's a premium. So if the market price is above the NAV, you're still kind of in trouble. Good boy. He loves it. Real quick guys, if you guys are enjoying the content, please give this video a thumbs up, subscribe to the channel. If you have any questions or want to see other videos, please leave a comment down below. I'll be more than happy to make other videos or just answer more questions you have on whatever I'm saying in the videos. I'll do my best to explain it. Also, Investopedia, Google, other YouTube videos, all your best friend. Definitely do your own research. Don't take my investment advice as like sound and go out and do this the next day. I'm just simply telling you things that I look at, how I look at them, and even potentially trades that I've made, such as MARA. So let's get right into that now. So MARA is a Bitcoin mining company. What they do, as I talked about in this other video, they basically buy ASICs, which are application-specific integrated chips or something like that. It's basically a computer literally purpose-built to mine Bitcoin. That's all it does. So they have a ton of these things on order, a ton of these Bitcoin mining computers on order from this company called Bitmain. Maybe another company too, but I think it's all from Bitmain. They're supposed to have over 100,000 ASIC mining machines basically, and they will get them throughout 2021. I don't know if any or how many are deployed currently, but by the end of 2021, they should be mining at roughly 10 exahashes per second or whatever. 10 exahashes is what they're mining at. So you can go online to a Bitcoin calculator and see that if you plug in 10 million terahashes, right, that's 10 exahashes, 10 million terahashes, you get roughly, I think, a little over 17,000 Bitcoins mined per year. So based on that, based on market speculation, based on Bitcoin going up in value, I'm basically looking at these miners as sort of a double play on Bitcoin, right? So the mining companies themselves are obviously mining new Bitcoin. So even if the price didn't appreciate, they're mining more Bitcoin every single day, every single year, every single month, whatever you want to think about it. So even if Bitcoin price stays constant, the idea is over time, as they acquire more Bitcoin, their price goes up in value, right? Because they can always sell this for cash or whatever it is. Now, to the contrary, say they mine Bitcoin for a year and then their operations get wiped out, they still have Bitcoin. So if the price of Bitcoin continues to go up, that's another way they gain value. So they have two ways of gaining value. If I just go out and buy Bitcoin, my only way to gain value is really price appreciation. Now there's some companies where you can deposit the money, you can earn interest such as BlockFi, but that's nor here nor there. The point is MARA. I like them the best right now simply because I can trade options on them. And their market cap was significantly less than Riot and BTBT, which is BitDigital. So if you want to go look at that other video, definitely do so. But the main gist is that based on the number of Bitcoin that these companies can mine per year, by the end of 2021, when all of these companies should have all of their mining rigs and them all deployed and up and running, Marathon Patent Group will have the highest hash rate, which means they should be able to mine the most amount of Bitcoin every year. If this is the case, they'll be mining more Bitcoin than any of the other companies. And if Bitcoin continues to appreciate in price, it means they will quickly become, quickly have a larger market cap than the other ones. Because of this, if Bitcoin continues to go higher, I think that people are just going to pour into the speculation. Also, if you look at the market caps, Marathon Patent Group as of yesterday was trading at 700 million. That's their market cap based on the market price. Today they were up to, I think, like 880 million because they were up 20%. But BitDigital was trading, I think, at like $1 billion, $1.2 billion market cap, and Riot also over $1 billion. So based on all of those things, the potential to mine the most Bitcoin per year, the lowest market cap, and they have options. Hive would be the one that doesn't have options, but I believe BitDigital does. I know Riot does because I do actually own some Riot call options as well, but I bought those back when the stock was trading at 8. I decided to buy some MARA call options, and here's why. So if you don't understand call options, no worries. You can always go check out some of my other videos, but the gist of it is I can get sort of the same exposure to MARA by putting up less capital. And what I mean by that is I bought the $5 strike 1 year out call options. So I bought the $5 strike that expire in January 2022. So that means I have a full year for these call options before they expire. Now, as long as they're trading in the money, which means the stock price is over the strike price of $5 a share, I can always just exercise the call option and buy 100 shares of MARA at $5. So because of that, you know, my thought process is the stock should be trading above that, right? Like if Bitcoin continues to go up, they get delivery of all of these miners, they're mining Bitcoin throughout this year, their market cap should, you know, get close to or potentially exceed, depending on the price of Bitcoin, what their current market cap is. So based on those factors, I decided the $5 strike, I purchased 1 year out, I paid $9.65. That means my break even for purchasing the $5 strike for $9.65, you add those together, 5 plus $9.65, $14.65. Now the stock today, I think when I purchased this call option was trading at around $13.50. which means I was effectively paying a little over $1 in premium compared to if I just went out on the open market and bought the stock. So you might be thinking, well, why would you pay more when you can just go buy the stock for $13.50 instead of paying for these call options where your break even is $14.50? The reason is kind of simple. So I bought 3 contracts. That means I spent like $2,800, so just under $3,000. And the reason is for options contracts, you have to multiply by 100 because it represents 100 shares. So 965 means it's $965 per contract. So instead of buying 300 shares in the open market, I would have spent closer to, I think, $4,000, right? So 1,300 times 3, right? $13 times 100 is 1,300. Multiply that by 3, which is 300. 300 shares in the open market would be closer to almost $4,000. So instead of spending $4,000 for 300 shares in the open market, I can buy 3 options contracts, which gives me the same exposure as if I had 300 shares, but I put up less capital. So I'm able to leverage my money a little bit more. I can put more money to work without having to put up as much money. That means I can put that other $1,000 into another investment like Riot or BTBT, for example, if I wanted to diversify, or I could keep some in cash. But the point is I get exposure to the upside with 300 shares still, but I put up $1,000 less. So I hope that makes sense, but if it doesn't, don't worry about it. Options are a whole different sort of beast in and of themselves. But personally today, even though MARA was up 22%, I did buy some call options when the stock was trading at $13.50. I paid $965 for those strikes. So if you see this video and MARA goes to 0, you can laugh at me because I lost like, I don't know, $2,800, $2,900. But if MARA doubles, if the price of Bitcoin doubles, if the price of Bitcoin triples, quadruples, MARA's probably going to go much higher, and in that case, the call options will all be worth it, and that's sort of my thought process. A lot of my trades are based on an expected outcome of something binary. So basically, I'm expecting to lose 100% of my money, or I'm expecting to double, triple, or more my money. So the idea with MARA and with Riot, for example, and any of my Bitcoin investments are effectively this. I'm either expecting to lose 100% of that money that I'm investing, or I think I'm going to more than 100%, have more than 100% gain. So basically more than double my money in any of these investments, and that's sort of my risk reward profile. Now realistically, I think it can be much higher. If Bitcoin goes to 100K, 200K, whatever it is, fine. And the nice thing about these call options is they don't expire for a year. However, even if they are expiring, I can always exercise the contract and just buy 300 shares. But again, I'm only paying $5 per share. So that means if I wanted to exercise these 3 contracts, yes, I already paid $2,800. So then to buy 300 shares at $5 a share, I'm only paying $1,500 additional dollars. So in the end, that's why my break-even price is higher than if I went out into the current market, because I would end up paying around $4,500 instead of like $3,900. But I'm able to put up less capital now, and say MARA goes up 2, 3, 4, 5x in the next 3 or 4 months, I was able to put up less money and still capitalize on the upside gain of effectively having 300 shares. I hope that makes sense. Options are kind of a different beast, so if it doesn't, don't worry about it too much. The easy thing is you could just go out into the market and buy MARA stock for $13.50 or whatever it's trading at the end of the day today. And my thought process is I'm willing to risk 100% of this investment, because if Bitcoin actually goes to a price target of over $50, then I think that MARA could easily double or more from here. So that's my investment thesis. That's the way I'm thinking about this. That's the way I'm trading this, and that's the way I'm playing it. Obviously, you should come to your own conclusions. But if you guys have any questions, leave them in the comments below. If you think I'm wrong, go ahead and let me know. Hopefully this video ages well and I make some money on this. Otherwise, the comments are going to be pretty funny a couple months, year, who knows how long from now. Oh, and real quick, so my speculative reasoning as to why they were up 22% today, aside from the fact that we saw Bitcoin just rallying back to highs from 30,000 all the way back up to, they're almost at highs as of the time I'm filming this, but basically 34,000 during market hours. Well, not only because of that, but also just because, well, these stocks are hot right now. They're high flyers, whatever. People are buying into them, and it's just pumping them up. But there was a press release saying that MARA and another company were basically joining together to create a mining pool, which means that they're basically sharing resources. So let's say Marathon Patent Group has 10 exahashes of hash rate, and this other company also has 10 exahashes of hash rate. Basically what it means is that together they have 10 exahashes of hash rate, and they can mine, they have a better chance of mining more Bitcoin every year. And then they basically would just split it 50-50, assuming that they each have, 10 exahash hash rate, they have the same hash rate, they would split it 50-50. But the point is, by having a higher hash rate and pooling with another company, by pooling your mining rigs, it's just better chances of mining Bitcoin and just better profits. So that could be it, but I think it's also just like buy the news, right? Anytime there's decent or good news or something that's being announced, people are probably going to buy this thing up. So I wouldn't overthink it too much. It's not like the price of Bitcoin doubled and they were like, oh, let's jump 20%. Nothing like that. But yeah, that's sort of my little speculative thought. If you enjoyed this video, please give it a thumbs up, subscribe to the channel. You might see more of Aston hanging out on the couch with me while I give these talks. But if you want to see any new content or potentially look at other stocks, I'm more than open to any of that. I'm heavily into Bitcoin and Bitcoin investments at the moment. That's just because I think it has the best risk-reward profile. But that is obviously for me personally, in my financial situation, I think it makes the most sense. So that's where I'm at. But if you guys enjoyed this, again, please give it a thumbs up, subscribe to the channel. Until next time, thanks for watching.